YouTube, hello and welcome back to another video. Now, today is about the break-even trader. The break-even trader stage is obviously basically what it says it is already. Break-even trader stage is where you probably have quite a decent system, you're probably executing it fairly well, you're having some good results, some decent results, but you are still having fairly regular losing months, or you're finishing each month maybe just 0.5% in profit, minus 1%. Then the next month is 1% in profit, and you're just fluctuating around sort of break even. And it'll obviously vary. So there's a few tips I just want to go through. So as a break even trader, you clearly already have a system. But the first thing I want to say is that as a break even trader, and this is the same for any trader, you are only probably going to get 6, 7, 8 potential really good trading days. So the first thing I say to break-even traders is look at your trade frequency. How high is it? And people seem to think the more trades you take, the more profitable you'll be. And it doesn't work like that, because your next trade is never a guarantee of the outcome. We don't know if each trade is going to be a winner or a loser. What matters is probability and risk management, okay? And pressing our advantage, obviously, on the winners. So the first thing I say is reduce your trade frequency, because there is no way any strategy on this earth where every day of the month is a trading day or an optimal trading day. There just isn't. It just doesn't work like that. So just assess your trade frequency, be very honest and see, are these all optimal setups? Because if they're not, then you can immediately start reducing your trade frequency, cutting out the trades that aren't optimal setups, and that will start then working in your favor by the end of that month and the end of that quarter in terms of hopefully more profit. Now, the second thing would be is, do you actually have an edge? Because there is a technical and a strategic edge, and then there's also a psychological edge as well. Now, if you don't have the latter, the psychological edge, you don't have a strategy. I can't speak today. You don't have a strategical edge, because you can have the best system in the world, the best strategy in the world, the best entry criteria in the world. But if your psychology is not on point and you are not ultra disciplined, you're not strict with risk management, you fluctuate between how much you're risking at times, and there's no consistency, then you won't be profitable. That strategy will not return you consistent profits. And by consistent profits, I mean 3 to 5% a month, every month, give or take, which shows real, true consistency of strategy, but also psychology. So my question to you is, have you done enough work? Have you stress tested your so-called edge, your so-called strategy enough? Because 99% of people I work with out there who come on board with me, who've been struggling for 2, 3, 4, 5 years, none of them have done enough data. None of them have done enough work, okay? There is a lot of want-to-be traders out there who are actually very lazy. And because the low barrier to entry in trading is incredibly low, they think that it takes a very minimal amount of effort, or they can get results very quickly. It doesn't work like that. Trading is the easiest way to make hardest money. I am sure you have heard that quote before. It is so difficult. So go away, do countless years of backtesting to ensure that the data plays out in your favor over a month, a quarter, a year, 10 years, etc. Get as much data behind you as possible, because it will not only help you, give you more proof in your system as long as you execute it properly, but it gives you a huge amount more of confidence. And it goes back to the point I was saying earlier. It then allows you to identify really what is a true optimal setup and what isn't, because anything that is an optimal doesn't get executed, and you should be sat on your hands the whole time. So this is what I was talking about with trade frequency earlier. You shouldn't be taking 40, 50 trades a month. That is crazy. And yes, if you're a scalper, it may be a different option. But scalping, in my eyes, I won't get into this as a topic, but scalping, in my eyes, is just not good for longevity anyway, in my personal opinion. But that is a topic for another video. So break-even traders, it's a very frustrating place to be, okay? And my last point around break-even traders is, when you have 2 losses, 3 losses, 4 losses, which happens to everybody, that is healthy, that is normal, that isn't a losing streak. A losing streak to me is when you've probably hit 6, 7, 8 losses. You can have 3, 4 losses, and that is normal in a row. And what I say to, again, struggling traders, break-even traders, when you've had 2, 3 losses, I guarantee you start subtly doubting your system. You start subtly doubting and starting to think that the market's going against you. You start losing that self-accountability. You start blaming others potentially. You start then looking at over trading with a little bit more risk so you can make back that loss or the losses you've just had. And you start tilting. And it's a negative spiral, and one you should never go down and never ends up positive, ever. So I always say to people, if you follow the steps I've mentioned in chronological order in this video, then when you do have natural 2, 3 losses on the bounce, you will remain level-headed, you won't tilt, and again, you will still stick to the plan, and you will still execute only optimal setups with a minimum risk to reward of a 1 to 3 to rule out all those losses you're going to inevitably have. And that is when you'll then start seeing those 3% months, 4% months, 5% months, okay? 3 to 5% a month consistently, I say this to my mentees all the time, is unbelievably brilliant. Don't let anybody else tell you anything different. Once you're nailing 3 to 5% a month, that is then when we simply scale your capital up, we manage your psychology even more, and we go from there, okay? So guys, I hope that helps. I just wanted to hop on here because it was a question I had the other day, and it was a conversation I was having the other day, and I thought, actually, there's probably a lot of people out here that would value hearing this advice. So go away, implement it. If you have any questions, let me know, and I will see you guys on the next video.